Welcome, everyone, to the Coin Bureau podcast. My name is Guy, and this gentleman's name is...
Mad Mike Mooch III.
Welcome back, Mad Mike Mooch III. It's good to see you, sir. For those listening, we are also on camera as well. We're appearing by live video link to each other.
Satellite link up.
Yeah, it's so far. Well, we've had a few technical issues before we started recording, haven't we? But we seem to have got through them.
We have overcome. Yes.
Yeah. Well, time will tell. I am still here in sunny Dubai, where it is 38 degrees Celsius, a very mild 38 degrees Celsius by Dubai standards. And you are back in your man cave in London. How is London? What's the mood like? What's the old weather like? How is everything?
It's the same, we've got some sunshine but freezing cold temperatures. The Queen is still dead. No Undertaker sort of last minute sort of resurrection. Okay. We're all getting on with life and it's all going okay. I mean, things are pretty much the same, unlike maybe the world of crypto where some big changes have happened.
What an absolutely beautiful segue. I really admire that. That's wonderful. Yeah. Things are very different from the last time we spoke. Obviously, last week we did our kind of on the hoof episode, where we looked ahead to the merge, to Ethereum's merge. And this week we're going to look back on Ethereum's merge and see kind of what the landscape is, what's changed, what's going on, what do we need to be aware of, and I think crucially as well, what might be around the corner.
Yeah, well, that's what everyone wants to know, and we can pontificate on that, and I'm sure people will take advice, but not financial advice.
Exactly. Because of course it isn't financial advice, which is something everyone should remember. I made some notes about what I was going to talk about, and I've kind of divided it up. Part one, I'm just going to call the bad news. Because I'm afraid there is a little bit of bad news. But don't worry, anyone listening. The good news. Part two is the good news, and then part three is sort of any other business. Let's just start. Let's get on with the bad news, shall we? Well, in fact, we can start with some good news, which most people will probably be aware of if they've been paying any sort of attention to crypto over the last, since last Thursday. Basically, the merge all went to plan, and nothing went wrong. And so far, nothing really has gone wrong with Ethereum itself, which is great. And
no portals to the other world have been opened or anything like that?
Certainly not that Vitalik or any of the other devs are admitting to. I don't think they opened up a gate of hell beneath the Ethereum Foundation or anything like that. But I mean, they may just be keeping that one under wraps.
Okay.
So
that's not the bad news.
So that's not the bad news, no. And it was. I don't know if you were sort of paying attention at the time, Mikey. Obviously, I was kind of glued to my laptop. I was watching it via a live stream from the Ethereum Foundation, and talk about Geek Central. It was absolutely wonderful. It was a great thing to watch. It was kind of weird because there were quite a lot of devs on the stream. Vitalik himself cropped up a couple of times, which was really cool. And all of a sudden the block was pushed, and the block was created, the code was pushed, and we would switch to proof of stake. It was and they had some little pandas appear because the Ethereum community are very fond of pandas. So it all went smoothly, and you could really sense watching the stream. You could really sense the relief kind of flooding through all these people, because they looked very tired. They'd obviously been working really, really hard for days, weeks, months, years on end, really, to kind of get this thing over the line. And yeah, it was impossible not to feel sort of really, really happy for them, because yeah, they deserved it. It was a really monumental effort, and yeah, and there was this kind of brief sort of surge of optimism in the crypto markets, which we haven't seen really since the bull market ended. And I was kind of keeping half an eye on prices. I was trying to get work done, but I slipped into that bad habit that so many of us crypto people have of sort of refreshing the price charts every 2 minutes or so.
Yeah.
Well, we've all been there, but it was exciting to see. I mean, I didn't expect it to last, but it was kind of good to see this little sort of relief rally, and obviously the ETH price started shooting up, as well as kind of the market in general. It made a nice change from sort of recent weeks. However, that relief rally didn't last all that long.
No.
It was 2 or 3 hours or so, maybe not even that, and yeah, things started tumbling back downwards, and it was obviously what those in investment circles would call a kind of sell the news event. You buy the rumor, and then you sell the news, and I think the Ethereum merge may go down as one of the classic sell the news events in crypto. Because it kind of looking at it a few days onwards, it seems now like the merge was kind of a bit of a short break from reality, and then after a couple of hours, reality sort of sidled back into the room and went right.
Wasn't I probably just raising a point seconds before you do, but didn't as soon as the merge happened, proof of stake get basically hinted that it was going to be anything that does that is going to be a security now?
Yeah, absolutely. Yeah, I was. Yeah, God, you are on the ball today, sir. Yeah, because at the same time that the merge was happening, the chairman of the SEC, Gary Gensler, who's sort of, I guess, crypto's biggest bogeyman at the moment, he was actually testifying in Washington. And he said, he pretty much said that he and the SEC by extension believe that that proof of stake cryptocurrencies could be designated as securities. And
the
this
timing
obviously,
on that, is that
it's hard.
malicious?
It's hard to. It's hard to imagine otherwise, I think. I mean, it may just be a coincidence. There seem to have been quite a few coincidences kind of knocking around the crypto space at the moment. But this seemed to be a curious coincidence, perhaps. But it could well have been deliberate. But so that kind of hit the markets a little bit. I'll talk about that in a moment, because actually what was more consequential had actually taken place the day before, because on the Wednesday, so less than kind of 24 hours before the merge was due, the latest inflation figures, the Consumer Price Index, the CPI, came out in the US, and it wasn't all that good. It showed 8.3% inflation over in the States. Now this was actually down a couple of points from the previous month. So these were the inflation figures for August. So they were slightly lower than the inflation figures had been for July, which does kind of suggest that inflation, may be starting to go down a little bit. But everyone was kind of hoping that they'd be a lot lower than that. So that, if you like, before the merge had even happened, the sort of wider world, the global macro landscape had sort of poked its head round the door and sort of said, I'm still here. Things are still really, really
Don't
bad.
Don't worry, we're all still fucked.
Exactly. Yeah. Exactly. So that really dampened enthusiasm in the markets. That kind of took any wind that there was out of the sails. And I should also point out that the core CPI, which is the same measure but excludes energy and food, that actually went up by over 0.5%. And that is not good news at all. So basically, inflation in the US, in case anyone had missed it, is still really, really high. Basically, the outlook at the moment, what everyone's kind of looking towards, is that we are going to see a big old drop across all markets, and some people are actually predicting that it could be even worse than the drop that we saw in 2008 in the wake of the financial crisis. So, yeah. It's not too cheerful from that perspective, I'm afraid. A lot of people are really kind of bracing themselves for more pain.
Well, I'm enjoying these sessions each week where we call each other. You tell us how life is going to be even worse, and then we sign off on a sort of cheery note, and then it gets worse next week again.
Yeah.
So
yeah,
great.
Can't
wait for next week when when the sun is extinguished.
So the giant meteorite heading towards Earth, that has kind of really got markets
sped up.
Worried.
Now due Wednesday.
Yeah, we've now got a definite date for that. That's impacting.
But I mean,
us
is this not just reminiscent of the 80s? Didn't we have 17% interest rates or something like that in the 80s or something like that?
Yeah, back in the 1970s. Yeah,
Or was it the 70s?
Yeah, so that's kind of famous, and that era is getting talked about a lot at the moment, obviously, because we're starting to see comparable levels of inflation. And actually, back in the 1970s, the chairman of the Federal Reserve was a chap called Paul Volcker. And his name is cropping up a lot in the kind of financial media at the moment, because he hiked rates to around 20% to get that inflation under control. Now, for context, we're sort of pushing towards the 3% level. We're kind of hovering around there at the moment. So there's lots of upside for interest rates, unfortunately. It remains to be seen whether we'll get anywhere near that figure. I think things will have to get really pretty bad for rates to go that high. But I mean, the Fed and other central banks are hiking rates a lot now. I think there's due to be another one in the UK. The European Central Bank, the ECB, they're hiking rates now. The high interest rates are just going to be a thing for the next few possibly years. So that's something to look forward to. Yeah. So kind of already ahead of the merge, there were concerns. There were things weighing on the markets. So the merge came. It was a success. The markets kind of pumped a little bit as if to kind of acknowledge that, and then they started crashing again. I think another thing worth pointing out. So we're now sort of moving post-merge. So there was a lot of expectation that institutions would kind of start piling into Ethereum, buying up ETH once it went green and its electricity consumption dropped, and that did not happen. Now, I think there are probably a few reasons for this. I think possibly it's a case institutions are sort of like, well, I think we're just going to wait a little longer and see that everything really is okay, because I think that's a wise move, really. Very prudent.
I think also it's just kind of representative of what's going on again in the wider markets. If interest rates are going up and markets are about to tank, people are not investing.
Exactly. Yeah. Exactly. It's a time, I think, to be very much sitting on the sidelines and waiting to get a better picture of where markets are going. Because I think everyone, as I said earlier, so many people are expecting a big old crash across the board. So why would you be investing now? Why would you be buying up stuff now if you think it's going to be much, much cheaper? In a few Yeah, exactly. So I think they're doing that. There is a kind of general trend towards just holding mostly dollars at the moment, because risky investments just aren't too popular when interest rates are high. People want to have cash on hand in order to pay down debts and things like that. So yeah, there's been a lot of selling going on in order to get into dollars, and also not much buying. So that's something I think that expectation was snuffed out pretty quickly. And I think also there's a sense that the institutions are waiting for some regulatory clarity as well. And this is tied into what you were saying, about at the very time the merge was happening, the chairman of the SEC was making these comments that he believes ETH could be a security. And again, I think if you were a large institution or any kind of investor, you would want to have a better idea of what the regulatory landscape is going to look like, because you don't want to buy up an asset and then find that you've unwittingly bought an unregistered security or something like that. That would not be good. So, those are some of the reasons why Ethereum hasn't done so well post merge, and again the kind of wider crypto market as well. And the SEC thing is quite worrying. And in fact, we've had another development on that front just in the past 24 hours or so. Because
News first of all, breaking.
This is very much news coming in over the wires. So first of all, obviously, Gary Gensler, the SEC chairman, he views ETH as a security because he argues that there is an identifiable person or entity behind it driving the expectation of profit. And this is key to how the SEC evaluates whether an asset is a security or not. And it's this thing, the Howey test, which I think I might have talked about before. But there's a fourth criterion on it, which says that an asset is a security if there is an identifiable third party driving the expectation of profit. So if you were buying a stock in Tesla, say, then that third party is, or Tesla, the company, or, Elon Musk, or, anything like that. It's pretty easy to identify. Now, the argument with Ethereum has been that it's, quote unquote, sufficiently decentralized. This is what a former SEC official said about Ethereum a few years ago. And we've kind of assumed since then that ETH would be safe from a securities classification, but that doesn't seem to be the case. And I think Gary Gensler's argument is that, well, someone like Vitalik, say, or the Ethereum Foundation or the Ethereum dev team, these to him are identifiable third parties driving the expectation of profit. So,
and also, surely if they hold a lot of ETH, then it's not decentralized. Do you know what I mean? Like, that's the whole proof of stake thing is kind of, okay, cool. Those who've got the cash have got the power and can be leaned on and can be influential. Yeah,
there are certainly a lot of centralization concerns around Ethereum, especially now that it's moved to proof of stake.
What's Vitalik and the crew? I thought they were kind of pushing to be less of a focal point around it. How is that happening?
Yeah. Well, this is something that's common with a lot of crypto projects now, and some have woken up to it pretty in a big way. Like Polkadot's a good example. So the guy who founded Polkadot, Gavin Wood, who was one of the founders of Ethereum as well, he has basically spent most of his time over the past year or so trying to decentralize Polkadot more, because he has very much read the way the wind is blowing. It's a difficult thing, because how do you disassociate yourself? How do you, as say the totemic figure of the project, like, well, Gavin Wood is still for Polkadot really, and Vitalik certainly is for Ethereum. How do you kind of distance yourself from it, and how do you argue that you don't have any kind of influence on the price of ETH or the price of DOT or whatever it might be? And I think it's a difficult thing to do. Vitalik can argue, he's like, well, I can't push code on my own. I can't decide on particular updates or anything like that. It has to be a decision taken among the entire team. But I mean, you could still argue that Vitalik could just, he could take to Twitter and move the markets because people listen to him like that. So it's a difficult thing, and there's lots of stuff going on behind the scenes. Ethereum sort of most crypto projects are sort of have a non-profit, usually based in Switzerland, that sort of coordinates their development, quote unquote. So,
but it's just a testament to the 4D chess of Satoshi.
Yeah.
Like unless that was just a coincidence, but he kind of knew, right, I can't be the figurehead for this, and just vanished well before, like decades before any of this was really coming to a head.
Yeah.
Genius.
No, it's very true. I think that is, that's my personal theory on it, that whoever Satoshi is or was took themselves, realized that this thing can't work if there is an identifiable person, at the heart of it, if you like, which is why they've disappeared. I mean, you could argue that perhaps they're dead, but I, for one, think that that is probably the most likely explanation. They've kind of removed themselves from the stage for this very reason. In order that the project, in this case Bitcoin, has a life of its own, can't be, it decentralizes itself. And the difficulty is, how does something like Ethereum and all these other crypto projects, particularly ones that are proof of stake, how do they move towards decentralization? It's a very good question. We don't have all the answers to that yet. And I think that's going to be a big theme of the coming, I say year. I mean, I think a big theme of the coming few years really is how do these crypto projects decentralize? How do you put decentralization into action? Because I think that's one of the only ways that these projects can keep themselves safe from regulations.
Mm.
So it's an exciting but kind of scary time for Ethereum. Especially from the point of view of what regulators make of it as well. And then, I alluded earlier to this news that had kind of just come through. So this is pretty crazy. I'm going to give you a little bit of background and then the quote here. So the SEC, they have charged a kind of crypto influencer called Ian Ballina. They've charged him with promoting unregistered ICOs. Now this goes back, I think this is from about 5 years ago or something. And there's this crazy line in the filing. I'm going to quote it here. So this is what the SEC said, and just kind of bear this in mind. So quote. So this is referring to an investment pool that Ian Ballina started for a particular ICO. Quote. The US-based investors in Ballina's pool irrevocably committed to the transaction when, from within the United States, they sent their ETH contributions to Ballina's pool. At that point, their ETH contributions were validated by a network of nodes on the Ethereum blockchain, which are clustered more densely in the United States than in any other country. As a result, those transactions took place in the United States.
Okay,
now,
that's an interesting take on it. How can they prove where those nodes were based?
I think they can look at things like IP addresses and things like that. You can look on. There's Zola.
Yes.
You can look online. There are sort of various resources. Oh, he's gone. There are various resources online where you can see where nodes are clustered. So it's fairly it's fairly easily obtainable information. But I mean this is enormous kind of overreach, I think, by the SEC. It's like, well, the majority of Ethereum nodes are in the United States, therefore Ethereum is American. That is a pretty large imaginative leap.
And is that something that's going to be contested in court?
Oh yeah. Yeah, I think Ian Bellina has already sort of hit back and denied the claims. Obviously, yeah, it's a bit it's a crazy thing to see, really, because it's, as I say, it does kind of smack of overreach. This is something that Ian Bellina's lawyers, I think, will kind of hone in on when they if the case comes to court. That's something that they'll push back against. But I mean, the implications of that are crazy. So I mean, let's say, according to the SEC, then let's say I sent you an ETH transaction from here in Dubai over there to where you are in London. Because not involving any US entities at all, but in the SEC's terms, because most of the validators on the network are American, that transaction falls within our jurisdiction, and because Mad Mike Mooch is on the US sanctions list, I have potentially committed a crime by interacting with you. I'm violating sanctions. Yeah, I mean that's it's a bit of a bit of a far-fetched example. Well,
no, but it's kind of I kind of get it. It's kind of I don't get it, but I understand the point you're making. It's kind of like okay, cool. Well, if you're gambling, if you're playing online poker, and the servers that the poker game is going through are based in America. Does that mean you're gambling in America? No, surely not.
Yeah. No, it's very true. It's very true. It's a pretty, as you say, it's a pretty bold claim for the SEC to make, and I don't think it will stand up, personally. But I mean, it does show the extent to which the SEC seems to be, going for crypto. And one of the reasons I think it's doing this is because this is something I've kind of speculated about a few times, but we're coming towards the end of September, and this is also going to be the end of the SEC's fiscal year. And me and a few colleagues here at Coin Bureau, we've kind of been speculating now that we can expect to see a lot of action taken by the SEC, to try and justify a bigger budget. In the same way that councils always dig up the road towards the end of the tax year, so they spend their entire budget, and then they can argue that they need a bigger one for the next fiscal year. This is something I think the SEC is kind of doing something similar. It's saying, look, we've got all these actions out against various entities in the crypto space, but we're going to need more money to fight them all, et cetera, et cetera, et cetera. So. Yeah, so that's a concern, certainly. Another thing that I think is going to kind of weigh on the crypto market in general over the coming weeks and months. And just to quickly before we take a quick break and move on to some good news, because I think we probably need to get in that direction. There are going back to these concerns around centralization. They haven't gone away. So a good example is of the first 1,000 blocks validated after the merge. 420 of those, 42% in other words, were validated by Coinbase and Lido Finance. So just two large validator entities. Obviously, Coinbase is based in the United States. Lido Finance is a DAO, a decentralized autonomous organization. It's not based in the United States, but a lot of the VCs who hold the LDO token, who hold voting power within the DAO, they are based in the United States. So you could argue that 42% of those first 1,000 blocks were validated by entities answerable to US authorities. Subject to US jurisdiction, which again is pretty worrying, and especially worrying when you factor in these kind of continued concerns around protocol level censorship. That we saw when we talked about the Tornado Cash sanctions and things like that.
Yeah. How do they do this? Can they just come? Can they move to Mexico? How does that work?
That could be an option. That could be an option. Coinbase has actually said that it's going to, it's going to fight this in court, which is pretty good
Admirable.
going by Coinbase. And actually, Brian Armstrong, the Coinbase CEO, said, around the time the Tornado Cash sanctions were kind of kicking off, he said that he would prefer Coinbase sort of not to validate on the network if it meant if doing so meant that they had to censor transactions. But I mean, remember, validating on Ethereum. If you're a big validator, that's a lucrative business. That you can earn good rewards for that. So we'll have to see.
And because they're public, they're probably going to need to be mindful of their shareholders.
Exactly. Yeah, they really have to step into line because, okay, however much you believe in decentralization, however much you want to, you don't want to enact protocol level censorship, if you're based in the US and doing so means you're violating sanctions, as I said in a previous episode, that's 30 years in jail or a $10 million fine or possibly both. And no one is going to risk that. However much they may believe in decentralization or what have you, no one is going to willingly violate sanctions unless they're crazy. So, yeah, there's a lot of headwinds facing Ethereum at the moment. There are a lot of challenges to overcome in the coming months, and this is the case for Ethereum, and especially with all the kind of action that we're seeing from the SEC and others, it's a case for the whole crypto market as well. So, really, I think going back to that, what I was saying about an upcoming crash, I think we can definitely expect lower lows from here.
Okay.
And the good news, finally, some good news. Mikey, I know you were you were worrying whether there was going to be any good news, whether I just dangled good news in front of you to try and keep you interested whilst I just hit you repeatedly over the head with bad news.
I've got the good news air horn. There we go. Good news coming.
It's been too long. Yep, there is good news. There's lots of good news around the merge. For instance, let's start. Well, first of all, ETH is going to become a more attractive investment in the long term. Keywords long and term. Because, well, let's look at the headline thing, if you like. Ethereum's electricity use is now absolutely minimal. It not only, and this is a crazy statistic, I think. So not only did Ethereum's energy use decline by over 99%, but the merge apparently reduced global electricity consumption by 0.2%, which is, I think that's nuts, really.
That is crazy.
And it did, it did make me think as well, are there many other industries out there that have addressed their carbon footprint to the same extent that crypto has? I mean, people...
No.
People, it's a stick that people use to beat crypto. We're saying, oh, well, it uses all this energy and stuff like that. The crypto sector can now turn around and say, well, we've just reduced our energy use by this much. What's your industry done?
I mean, it may mean that we're all violating security sanctions, but we have reduced
hey, at least
our
we're
energy
green.
by 99. Yeah.
Yeah, come
we're all
on,
going to prison, but
at least the air in the exercise yard will be nice and clear.
No, it's very good. It's very noble, and it's it's the way we should be going, if possible, while keeping the integrity of the project. So it is great. It is a long-term view. I think the nerds over at Ethereum have been thinking about this, have been concerned about this, have got a plan. We're only 55% of the way there now. Is that right?
Yeah. That was Vitalik's statistic. Ethereum is now apparently 55% complete.
Okay.
So, And I think that's kind of good news in a way as well, because I think a lot of people may have been sort of looking at the merge and going, well, this will be, the final transition, and it'll use, a negligible amount of electricity, and everything will be fine. And no, we've still got a long way to go, and in a way, I think that is a good thing, because there's still a lot of work to be done on Ethereum. It looks like the team are, now very much focused on those upcoming stages, which obviously we talked a bit about last week. The Verge, Surge, your favorite, the Purge, and then the Splurge as well, which we'll talk about a little later on. But this energy reduction of Ethereum, I think, is a wonderful thing. And for a number of reasons. I think one of the things that occurred to me was that the argument that NFTs are bad for the planet has kind of evaporated like that, which I think that could open up a lot of adoption. I think a lot of artists, musicians, others who are likely, who have a use for NFTs, they are going to be able to do that in good conscience now. So that could be I think be long term good for the network.
Yeah, no, for sure.
Yeah. And obviously, the energy use reduction, that means that ESG focused firms, ETH is a much more attractive proposition for them now, because they're very much bound by these ESG concerns. So that gives them an excuse, or perhaps you could say one less excuse not.
It removes a barrier to investment from them.
Very much so.
So it's an more attractive proposition, which is good, because you want more money in it, you want more people adopting it, and more technology to be driven by it.
Damn straight. And I think, again, from an institutional perspective, I think obviously these guys do lots of due diligence. They look into the project, they look at the people behind the project and stuff. And I think the fact that the Ethereum team managed to pull off this merge, which really was a big deal, and it was a difficult thing to have done. I think that investors doing their due diligence will be able to look at that team and go, these guys clearly know what they're doing. Okay, they look like they could use a wash and a new wardrobe. So I think, again, long term, this is going. All these factors are going to make ETH a much more attractive asset for when those institutional investors do actually decide to ape in, which obviously they didn't in the immediate aftermath of the merge. And going back to what you were saying. As more people join the network, as more people invest in ETH, as the Ethereum network gets used more, because hopefully more people are minting and transacting NFTs and things like that, that means that as the network gets busier, more ETH is burned in transaction fees, and that means that ETH itself could become deflationary with enough network activity. And this, as just as an investment case, that is a huge deal. Because if the supply is decreasing but the demand is increasing, the price goes up. That's what Economics 101 says. Now, you can actually look at this on ultrasound.money. ETH issuance, it hasn't gone deflationary yet, but it has slowed to 0.21% since the merge. So issuance is very much on the decline, and I think with enough activity, ETH will become deflationary due to those fee burns. So there's also, and then we've got these other upgrades coming up: Verge, Surge, Purge, and Splurge. These are going to help further decentralize the network. They're going to make it faster and cheaper to use. They're going to make it easier to become a validator as well, and this means that we could see some more of these investors decide to become validators. That would help further decentralize the network. Ideally, we'll have more people joining as validators from outside the United States, so that becomes less regulatory capture regulatory capture by the SEC becomes less of an issue. So, the next kind of big upgrade is the Shanghai upgrade, which is set for sometime in early 2023. Now, there's going to be some quite technical stuff going on with that, but it should allow some ETH stakers to withdraw. So some validators will be able to unstake their ETH if they want to. It should also make some improvements to gas prices as well. Now, this ties into another bit of good news around the merge, because there was a lot of concern. Now, this was a bit of a misconception that suddenly after the merge, people would be able to unstake their ETH and there would be a flood of ETH hitting the market, and that would not only tank the price of ETH but compromise the security of the network. Now, this didn't happen because that's not what the merge was about. But after the Shanghai upgrade next year, you will be some validators will be able to unstake, but fortunately, the Ethereum devs have anticipated this. So withdrawals of staked ETH are going to be staggered. So they can only be done at a fairly slow pace. So we're not going to see a kind of mass dumping of staked ETH onto the market, which would not be good for Ethereum. And I also think that there was some data released recently that showed a lot of staked ETH was bought at around the $1,700 mark. Now, if we take a look at those prices again, ETH currently hovering around the $1,300 mark. So that would mean that any validators who did want to unstake and sell, they're currently underwater anyway. So you'd have to ask why they would do that. And if you're a validator, you know that you're locking up your ETH for a long time. So I think these concerns that some validators might dump their ETH onto the market as soon as they can, I think those are kind of unfounded. I'm sure we will see a bit of selling, but I don't think it'll be anything near enough to crash the price or really have any noticeable effect on ETH's security either.
Well, that's good. I mean, I it seemed to me, as an ignoramus from the outside, that if you've got some ETH, and unless you're day trading with it, if you stake it, it's just kind of a way of making it make money for you, earn money for you.
Yeah, passive income.
So it's for those savers. It's kind of, you stick it there, forget about it. It can make you a little bit of money, and unless it crashes, then it's just that's what it's kind of an investment.
Yeah, if you believe in Ethereum in the long term, if you believe that it's a viable project and it's going to achieve all that it promises to, then staking is a great way of not only helping secure the network, but also earning this passive income through staking rewards. So yeah, for me it's a bit of a no-brainer really if you've got a long-term view. And I think is something that could really help attract bigger investors as well, because big investors love passive. I mean, who doesn't love passive income? But these guys will, I think, look at it in the same kind of way that they view dividends from certain stocks. It's like, okay, it's worth having capital locked up for a long period of time because we get this drip feed of income
like
in the form of
bond.
Dividends or. Yeah, it's the same. Yeah, it's the same reason why people invest in bonds, because you put a large sum down. You lock up liquidity, in other words, but you earn interest on it over a slower period. And obviously the great thing about bonds is that you can you get that money back that you've invested as well after a fixed term, after the term of the bond has expired. So yeah, it makes a good case for ETH as an asset to earn passive income with, which again I think is going to make it a much more attractive long-term investment. So that is some of the good news post merge, and maybe not quite as. Again, this is something we're going to have to not only kind of wait a long time for. We're just going to have to. We don't really know how the next few months are going to play out. I mean, as I say, we've got a pretty good idea that we're going to see lots of regulatory action. We're also likely to see a crash in asset prices across the board, and we're also likely to see more inflation and all this sort of stuff. So this good news is something that you've kind of got to park for the time being and look quite a long way ahead to sort of brighter days in the future.
Well, I can't wait for next week.
How patient are you feeling, Mikey? You're not. Are you a patient man? I didn't think you were.
I'm a lazy man. I think that's the most important
Okay.
thing to remember. So, like, I'm not going to be selling or shipping anything because I can't be bothered. And it's just wait it out. I think it'll be fine. I mean, unless you need a new kidney and you have to buy one off the black market, then sell your ETH.
Okay. I should also point out that is not financial advice. We've had the bad news, we've had the good news, and now for kind of any other business.
The ugly news.
The ugly news. If you thought the last news was bad, wait till you see this. I suppose the ugly news, that's a good term for it. The other question I kind of wanted to address that some people have been asking is like, what happened to this proof of work fork of Ethereum? That everyone was lots of people were getting kind of excited about this idea that Ethereum miners, because remember that some of the biggest losers from the merge have been Ethereum miners because their main source of revenue is now gone. And there's been a lot of speculation about what Ethereum miners would do post-merge. And again, actually, I think that kind of also ties into some of the bad news, or some of the reasons why Ethereum especially kind of struggled price-wise in the days after the merge, because there was a lot of data saying that in the lead up to the merge, exchange inflows of ETH were really high. So what that meant was that lots of people were moving their ETH to exchanges. Now, there's only one reason generally why people do this, or one big reason, and that is in anticipation of selling it. So what we think is that a lot of Ethereum miners kind of sold straight after the merge, especially when that little price pump went on. And that may have been them kind of capitulating. That may have been them just kind of selling all their assets and just getting out of the mining business altogether, or just selling a lot to kind of cover their costs in advance, things like that. So that I think is another reason why the ETH price tanked in the days following the merge. So ETH miners have kind of gone and done a few things. Some of them are mining other proof of work coins, of which there aren't an enormous amount. There's one called Raven coin, which has attracted quite a lot of, its hash rate has shot up. There's one called Ergo, which is kind of affiliated with Charles Hoskinson, who's the guy who the founder of Cardano, which is obviously a rival to Ethereum, and was one of the Ethereum co-founders as well. He was the guy who was sort of CEO for a while until he was booted out. So his sort of little side project, Ergo, that's attracted a bit of hash power from Ethereum miners. But there was also this proof of work fork. That was something that a lot of people were kind of worried about. The ticker for that is ETHW, ETHW. Now, this has kind of struggled really since the merge. It hasn't attracted all that much interest. There were a few setbacks for the networks as well. It suffered something called a relay attack. Not a replay attack. And it's now down. ETHW is down sort of 80% or more from its all-time high earlier in September. Kind of ahead of the merge. So it doesn't seem to be gaining much traction. It doesn't seem to be gaining an awful lot of support. And as a lot of people have pointed out, like, why would it? We have Ethereum Classic already. That proof of work fork of Ethereum from the DAO hack, which I think we mentioned in advance of the merge as well. So that's another. Yeah, I don't think the ETH proof of work fork thing doesn't. It's still going. It's still a thing, but it doesn't really appear to have played out. And I don't think it's going to be. I don't think it's going to have any sort of real effect going forward.
Okay.
So
well,
I know that was something weighing on your mind.
I do feel for the miners.
Yeah. Yeah, no, it's tough, isn't it? It's you've got to have some sympathy for them and stuff like that. It's they are a big kind of casualty of the move to proof of stake. But crypto, like any other business, can be ruthless sometimes, can't it?
Mm. Yeah.
Okay, so let's conclude. So there's lots to look forward to for Ethereum and crypto in general, but there's lots to be concerned about too. And I think the important thing, perhaps, to remember for anyone, all the listeners, is the bear market is going to continue for some time to come. And as you said, it could get a lot worse. Bear markets tend to, they can last for a long time. And I think really the kind of, in a way, kind of good news is that this is a bear market that has been driven by much more general factors. It's not a crypto-specific bear market, even though there are kind of unique challenges facing the crypto sector, especially from centralization and especially from regulators like the SEC. This is still a global problem. Global markets are struggling with this as well. So. Although we've got a long time of it left, it will come to an end. And well, there was a bit of good news. I don't know if you saw this, but a few days ago, the chief of the World Health Organization said that the end of the pandemic, could in fact be in sight.
I thought it already was.
The pandemic is still a thing, but according to the World Health Organization, we could be about to see the end of that.
That would be great.
Which would be that would be great. I don't think anyone would be sad to see the back of COVID.
So how are things going to improve? What are we gonna see? Is it gonna be gradual improve? Is if there is a ceasefire in the Ukraine? If the pandemic is kind of slowly coming to an end and China stops this nation or citywide lockdowns and production is going to start happening a bit more and ships full of goods are going to come out of China and across the world, sort of like as a catalyst for the economy. Are people going to start if inflation rates go down? How long is that going to last? Is it going to last 6 months? Is it going to last a year? What are your thoughts on all of this? When is the end of the tunnel happening?
It's a good question. And I think a lot of it is tied in with these interest rate hikes, because obviously the driving factor behind those is high inflation. Now, when interest rates get hiked, they take a while for the impact to be felt. It can be a few months down the line that you feel that you get a sense that interest rate hikes are making a difference. So yeah, in terms of time, I mean, I think 2023 is going to be another tough year, but I would hope that by the end of next year we could be starting to see, I suppose, what you'd call green shoots. Hopefully by then, inflation is, if not under control, is starting to noticeably decline. These high interest rates are starting to have the desired effect. And as you say, sort of by that point, you would hope that trade has resumed somewhat. Certainly, that the war in Ukraine has come to an end. I mean, we seem to have that situation. I think seems to have kind of improved slightly over the last couple of weeks or so, because Ukraine is actually doing quite well. They've actually pushed the Russians back a lot. I don't think that means that the end of the war is in sight, but it could. I think it certainly suggests that it's a war Ukraine could win, and that that an end could come. So I think in answer to your question, how long we can expect, I think we've got another year of this at least. But I would hope that by sort of early 2024, a lot of these problems would have been will have reduced a lot. We'll hopefully have much lower inflation. The situation in Ukraine, hopefully peace will have been restored. And obviously, as pandemic restrictions, if the pandemic really has gone, really is brought to an end, then manufacturing cranks back up. It should be noted actually at this point that if the pandemic is kind of officially declared over, it could actually have a negative effect on markets, because some people have speculated that because of these Chinese lockdowns at the moment, because so much of China is under lockdown still. This has manufacturing output there. Remember, China, makes pretty much everything. Manufacturing output has actually been way down in China. Now, if manufacturing in China suddenly restarts, the demand for energy from that will be massive. And obviously, energy is a big, big problem at the moment. Energy shortages and rising energy prices are one of the big drivers of inflation and unrest as well around the world. So it might be that the end of the pandemic isn't quite the sort of white swan that we might have hoped for. But I think still long term.
Don't they buy their energy mostly from Russia though?
I think China gets a lot of its energy from Russia. But in this sort of situation, it doesn't really matter where particular countries get their energy from, because all that really matters is that because we live in such a globalized world, shortages somewhere, let's say the energy shortages in Europe, have an effect on global prices, because the commodity, the amount of the commodity in circulation has dropped, thereby the price goes up. So this is why, when people say, "Oh well, these energy concerns are, they're Europe's problem. They're something between Europe and Russia." It's not the case. Prices go up across the world because there's less energy to go around.
But there's not less energy. The reason why there's an energy shortage is because of the sanctions. I thought that's what. So like Russia's still got the gas. They're just not. We're not able to buy it because they're being rascals.
Yeah, certainly. Yeah,
So that's this is my sort of trying to just figure it out and understand. Okay, cool. Well, if China comes back online and starts making stuff again, if they buy their it's not good for the war in Ukraine because the sanctions mean less. But I assumed basically people. I thought we were buying Russian oil from India anyway, or not Russian gas from India. That's what I was.
Yeah.
I was told. Cool. We're buying gas from India now, and they're buying it from Russia, and it's just.
Yeah. It just goes through different sources. Now, I think, the sanctions are a big, the main reason why there are these energy shortages, because Russia isn't able to export so much of its gas or its oil. And look, again, this is something to think about in terms of the future, because let's say the war in Ukraine comes to an end. Let's say, because of the way it's going at the moment, that Ukraine actually wins, that the West is prepared to keep pumping enough money and weapons and all that sort of stuff into Ukraine to actually mean they're able to kick the Russians out, and the war comes to an end. What happens with Russia then? Do Western countries, does Europe and America turn around and go, okay, well, you take the L, Putin. We'll lift the sanctions now because the war is over. I don't think that I can't see that happening. I think the only way that we could see sanctions lifted is if Russia voluntarily pulled out, and said, look, we're sorry, it won't happen again. Let's all be friends and let's start trading again and stuff. Can you see that happening? Because I certainly can't. So,
No.
There's perhaps this idea of sort of looking further along the line and thinking, when is everything going to get back to how it was? It won't. Things are going to be very, very different. And already there's a lot of talk about food and energy independence, because this war and these sanctions have really exposed, like especially for Europe, but I think in general as well, how delicate everything is, and COVID has done this as well. How delicate supply chains are, how delicate this whole kind of globalized world is, and actually the only way that you can really prepare for an unforeseen crisis like a war or a pandemic or whatever is to try and be as energy independent as you can, or grow as much as your own food as you can. And I think this is something that we're going to see a big trend towards. And this is from an environmental perspective as well, because I think people are becoming more and more concerned about the fact that food gets shipped around the world, and obviously, that's carbon emissions and things like that. So I think we are going to see a trend towards countries trying to produce more of their own energy. More of their own food, more of their own goods and things like that. And some people are really kind of talking about a possible end to globalization, which is, I think that's a fairly bold call at this stage. But I don't think you can deny that we're going through a period of enormous change, and things are hopefully going to look a lot better in 2024, say. But they're also going to look a lot different as well. And we just got to hope, I think, that they look different in a good way.
So we're going to have to be off grid as a country.
And everyone's going to have to grow their own vegetables. Get solar panels on your house. Dig up your garden and turn it into a veg patch. Insulate your roof. Keep lots of tinned food.
Guy, that was the cheeriest news I've heard from you. But no, it's a bit eye-opening. Maybe it is more of a shift in our life than we are acknowledging. And higher energy prices are something that's going to be here for a while until we adopt nuclear or some other sort of which don't China own all the nuclear power stations in the UK anyway?
I think so. I think they're basically paying for them. I think. That's if you wanted an example of globalization in action, there you go. But I think this is a very long term thing. But the future is going to look a lot different. There's food for thought. So, Mikey, I'm glad I've been able to dampen your mood.
It's all right. My IQ will mean that I will forget about this shortly. Ignorance is bliss, and I will have a cup of tea, and it will be all right.
Couple of cups of tea, a donut or two, and you'll be right as rain.
Yeah, you have to put a little fat jibe in there. Noted.
You'll remember that. I will try and for next week's episode, I will try and talk about something more cheerful. How about that?
Why don't we do that? Why don't we let's get into the WhatsApp and start thinking about some brighter topics that we can sort of divulge into and explore.
Okay, good idea. I am sort of trying to work towards doing an episode on Satoshi Nakamoto as well, because I've seen a few people asking for that. I did sort of promise to. We did kind of promise to do that a while ago, and a few people have held me to that. And I think it's something we'd both enjoy.
I think, I'd love to learn more about that, but without doing any of the research myself.
Okay, well, that's fortunately where I come in.
Wonderful.
All right, man. Well, it's been lovely to talk to you, and give my love to everyone in Blighty, and we'll see you next week.
Don't forget, episodes drop every Friday. Like and subscribe. Give us a little rating, maybe, if you've enjoyed it. 5-star only. And also, if you've got someone who might be into crypto and doesn't listen to this, tell them about it.
Yeah, spread the word, folks.
Share the love.
Like, subscribe, and spread the word.